Okay, guys, rightio, let's crack on today. This is Trade Talk, and we are going to go through some of the pairs. We're going to go through one or two of the indexes. The indexes have made all-time highs, and it continues to do so. Dow Jones continues to do so. It's very interesting indeed. Gold slipped back slightly as well. I'm going to kick off with pound dollar today. All right, we're going to look at a little bit of Fibonacci, but for now, I just want to look. I'm going to look on the 4-hour and daily, and also the weekly. Now, what I like here about this weekly on pound dollar, it's a nice inside bar. Now, if we switch to a bar chart, what we have here is a consolidation at these secondary highs from the sell-off. We flatlined there in August. Now we've moved up and we've consolidated. Now we have got an inside bar here from this previous red bar. We kind of had it here. Now, what this can mean is that the market is ready to propel out of this range. It just needs an excuse, sort of. Sometimes fundamental data helps this. Sometimes the coiling at these levels, the energy that's gained through this coiling and consolidating does then prompt the market to break out in either direction. But generally, when you see an inside bar, a blue inside bar after the market has teetered off somewhat from a previous high, we can then propel higher. But we did get a red candle lower, and now we've got a blue inside bar again. Can you notice that these days, or I should say bars, are getting smaller each day? From up here, each day is smaller. One getting smaller and smaller and smaller, so probably with the same size, that red and blue there. But generally, this is a crucial week coming now. I mean, we're going to close out the week. You know, it's coming up to Friday, and it's closing out the week now. But if we do break out sort of this top level here, which is pretty much the level there is 129.50. I think any gain above 129.50, if we can just get above, I do think we're going to break out above towards 133. Certainly the highs seen 133, 134 back in March of 29 earlier this year, sort of 8 months ago. So we do need to get above and stay above 129.50. Okay, no coming back down through that level. If we do rise above 129.50, sort of that level, that range there, if we do get above but dips back below within a week or two, then we are heading much lower back towards the lows, sort of around 122, 123, I'd say, would be a target for pound dollar. But overall, I personally think this will head higher. It might come off a little bit first, but I do see it going higher, and it's all dependent on dollar strength. Now, again, we've got an inside bar. We'll change to a bar. It's definitely an inside bar here on dollar yen. Now, this is something I'm more bearish on, but I wouldn't be surprised if we went up to test sort of previous highs first, sort of a 1, 2, 3. If you're looking at, I can't even think of the term. Actually think of the term, what the style of trading was that Henry used to do. I've actually drawn a blank. So from here up, that could well be the case here, and this could be phase 2 right here, and this coincides with a test of 110. Remember, it's a round level. It's a round level before we then head back off. But what makes me feel a bit more bearish here, and the dollar in general, because gold has bottomed out as well, we'll come to that, is this inside bar here, and I do think we're going to test lower ground. We're very weak here. The down days have always been bigger over the last 6 months, and we are, I think, heading lower over time into 2020. Okay, but again, 1 or 2 more weekly bars needed here. Okay, for some kind of confirmation. Who knows what we'll get? We might get that breakout up here, and then lovely move above 110 could ensue. But for me, 108.25, sort of the round level there, 108.20, 108.25. If we dip back below there, we're heading down to that 105 level. That will be a nice trade, and I'll keep my whereabouts on that. Let's just check out gold now. Gold has held. We had that over the last week. I mean, look what we've done here. We've had a stellar 6 months also on gold, which started back in May. Consolidated, we did dip back off down to this neckline here. Now this neckline right there is crucial. This is where the market really broke out above 1450, and 1450 had been resistance for some time, 1460 as well. So this level here, we have closed above it. We sold off. A few people expected gold to go even lower and break this line here. If we had, the market would be coming back off the test 1350, no doubt, but it's held. It's a small up week, although it's held, and we're back inside that bar. Obviously the tail's not. The tail did dip below that level, but I do like the fact it's bounced off that level very quick indeed. It's literally a shot down and spike back up, which is deemed very, very bullish for the markets to test that level below and then head back higher. So let's see on that. I want to see another candle, ideally another blue candle next week to test higher level. If we really struggle here and we really lingering around 1450 and it just looks weak, there's no momentum on the blue days, on the up days, then we will dip back below into the end of the year. So that's going to be very interesting to watch. Okay, that will be gold against dollar. But if gold is rallying, that will also mean it's weak dollar, because the dollar might be weak just for gold's move. It doesn't necessarily mean gold is XAU is strong. And if that coincides with dollar weakness, we will see dollar yen suffer. Like we just said, we will see it suffer and head back lower, and we will see pound dollar come back and rally higher, because that is against the dollar, so that should gain and get back above that, towards that 133 level. But it's all to play for. That's a potential scenario that's going to play out. Right, let's just check out some of the big pound pairs. Pound Aussie, pound Kiwi, very briefly. Again, another strong day today, very strong. Sorry, so stay strong day, strong week, I should say. Lovely strong week, up around 340 plus pips. We're now level with the previous high. If this closes above this level here, sort of around 189.30, we will go on above 190 into next week, but it needs to close above this 189.50 level. We're currently above it at 189.65, but we need to remain above it. I will look at pound Aussie again early next week. I will be putting some trades on later today as well. Small trades, and we'll top up early next week. Again, pound Kiwi, I'm extremely bullish on. I have to be honest, we've suffered so much over the last 4 or 5 years, especially the last 2 years with pound Kiwi, and I do see the market leveling here around $2, finding its feet, and then rallying much higher, 2.1, 2.2, and I do see that. And when you look at the ground that we can cover here, it's startling. Let me just zoom out and just give you an idea of where we were. Well above 2.4 up to 2.5. This was in 2015. Okay, so it's really the last 4 years we've suffered, and what we've created here is one big W. Now, if we break out above that line, it's basically pretty much reverse head and shoulders with a double top. That's what that W is. If we now get above there on a weekly chart and close above here convincingly, we are now going to coil higher. Did you notice the last time it was at this level, it was definitive? We had a blue up candle here, and then it was just down. It didn't hold on, but now we're consolidating. We're consolidating here. So I'm just going to zoom in there and show you that's the difference this time. The last time we were up at that level, the market literally gave up, came off, back again, lovely double bottom, which shows solid strength around 184, 185. And now we've come off, but we've entered a consolidation phase, and that could be the end result. So let's see again into the new year. That will probably prove itself. There'll be time in between to make a nice bit as well. But other than that, there's a lot to come, guys. I'm just going to cover the Dow before I head on, start my Friday properly. 27,866. This is clearly going to 28. The highs are getting higher, and the lows are getting higher as well. Look at that. I mean, it's just, this has all the hallmarks of a bull market that just doesn't want to relent yet. And I don't see it relenting anytime soon. You zoom out and it's just, where's it going to end? I think we're going to melt up, so to speak, shortly. We're going to have one just dispersed rally that's just going to absolutely go crazy, and then we should see a sell-off from there. But this market at the minute, it's too steady, it's too consistent, it's consolidating nice. The falls are short-lived before a rally then ensues. So for me, there's no let up yet, and you can only be long this market. There's no reason to be short. Big sell-offs don't come when markets are just building gradually. They come when the market's had a big melt up. People get greedy and then it comes back off. So the time will be nice when we get to short this market. I believe there's more potential on the downside than the upside, but the upside you'll be able to still make a few pips as well. We may go long this pair again, but for me, I have to be not short now, just long on this. So we'll adjust our trades to suit. All right, guys, I'll leave it there. All the very best, and we'll catch up soon.